you're also getting this at a price because we run this company as owners, and we do not run it purely to actually make people happy quarter to quarter. And I honestly don't pay a lot of attention to that. I'm paying attention to where will the company be in 2 years.
Hi there. In this video, I'm going to be reacting to Palantir's latest earnings that just came out yesterday and talking about why the stock price has fallen so dramatically. And I'm going to challenge you as an investor to separate the truth from the noise. So I don't speak about Palantir in my videos very often, but it is my number 3 holding in my portfolio. It is crucial to my portfolio, and I really believe in the company. The reason I don't talk about it very much on my videos is there's a difference between being able to understand and appreciate a company and believe in it, and having the expertise to really be able to communicate that in video form. It's hard for me to talk about such a technically challenging company and feel like I'm really delivering value in talking about it with you. In this particular case, I think Palantir and the reaction that's come from the earnings that was released yesterday, I think we can really talk about a very important part to being a solid investor over the long term. And that really is being able to separate the truth from the noise. So whether that's positive, like just unbelievable hype and excitement, or whether that's negative, when you're just hearing all kinds of negative things about a company and the stock price is falling dramatically. And in Palantir's case, I believe there's a really good example of each that is part of what's going on with their story right now. So I'm going to start with the noise. To me, one of the things that's constantly brought up on YouTube videos and in the media and all that kind of thing is Alex Karp, the CEO, and his personality and his passion and the way that he speaks. When he answers people's questions, it always sounds like he's doing some German philosophy, crazy technical software, advocacy, politics, all just sort of smashed up into one.
We left primarily for political reasons, but of course Palo Alto is somewhat of a inelastic luxury product, meaning you must pay and pay and pay for the comfort of having oddly misaligned with American interest political views and in general high costs. And that combination of radical optionality on expenses and what we perceive to be macro conditions converging with product conditions allow us to kind of see what we think will be a profitable company in 2025.
But he's super passionate. He's very proud of his company. We can all tell that. And he really tends to either get people really convinced in the company or really annoyed and just sort of turns people off and makes them want to have nothing to do with the company. And to me, that's noise. And as investors, we can use other people's reaction to noise to our benefit. So I think of one of my first impressions of Elon Musk was when he went on Joe Rogan's show and famously got a lot of attention for just being himself, being a regular guy, and ending up smoking some weed on there. Now, would I do that? No. Would I always say the same things that he said in public? No, I wouldn't do that. But at the end of the day, when it comes to his company, that's just noise. And so if people are going to react to a CEO like Alex Karp or Elon Musk, and they overreact in a negative way, we as investors can identify that as noise and realize, that's not really going to impact the company fundamentally long term. If we deem it just noise, that may be creating an investment opportunity. So you as an investor have to look at, okay, Palantir dropped 14% yesterday. How much of it is because of annoyance with the way that Alex and the team presented the information? That's up to you to decide. And I'm not saying that that's the only noise going on with the company, but that's a very easy to point to example. An easy example to point to on the fundamentally, structurally important side, the truth side, is in looking at the business, the thing that really gets me, it's gotten me over the last 2 or 3 quarters, is they are reporting that they're hiring all these salespeople and they're ramping up their sales staff to like exponential numbers, which is great because we want them to continue to grow, and they're going to need a lot of sales staff who will really get their product out there to people. But one of the things that bothers me is it seems like these salespeople are not delivering, and Alex's answer to that is, well, they're not qualified yet. Like we only have 40 or 45 salespeople that are qualified.
The sales in the U.S. commercial, which are, by any standard anomalously strong, almost 80% growth this year without SPACs, total organic revenue. It's being driven by 42 salespeople. Less than 1.5% of our company is accredited. We have more, but those are the ones that have actually learned our product and are able to sell it.
Okay, I get that. It's really complicated software, and I actually work for a software company, and we don't expect people to come in and be able to sell on day one. Okay, we do expect it to take 6 to 12 months before someone can effectively really sell the software at a peak level. So I get that with Palantir's software, it's even more complex, more complicated. It's going to take a lot to get those salespeople to being where they're qualified, which is what I think Alex keeps calling it. Well, if that's the way it is, that's fine. But why are we spending so much money, hundreds of millions of dollars in a quarter on stock-based compensation when a large part of that is to go to pay the sales staff that aren't delivering yet? As a business person, I just couldn't imagine coming up with, here's my plan. I'm going to pay all these people this stock-based compensation, bonuses, massive salaries, whatever it is, and they haven't even become qualified yet. They're not delivering yet. Why not have a very aggressive commission-based or performance-based benefits package for when they actually deliver? You want to come and work with us. We're excited about you. We think you're fantastic. You think you're the best salesperson in the world. That's great. We're going to pay you a reasonable salary to start. And boy, oh boy, 6 months, 12 months, 2 years from now, when you're qualified and you're landing these big deals, man, are you going to rake it in? I'd be okay with them giving a very aggressive compensation package if it's when they deliver sales. But we're just not seeing that in the numbers. So I think that's a management struggle. I think it is some of the truth that people are reacting to. Maybe they're not identifying it or putting their finger on it in quite the same way, but that's an example of one of those things that I think is a legitimate concern with the business. And I think Palantir, the management, they're smart people. They're going to figure this out. I really think this is a growing pain that comes from not having salespeople for so long as they were a growing company, and then suddenly deciding, okay, we are going to have a sales team and we're going to ramp it up really fast and we're going to throw all these people at the problem. I think it's a growing pain that they're going to figure out that if they would have had 1 or 2 or 5 or 10 salespeople in the early stages, they probably would have not come to this point. They probably would have worked out a better plan much earlier before they ever became a public company. And then by this point, I think they would have a better solution. So as we go through the rest of this earnings season and in future earnings seasons, as an investor, I want to challenge you to always try, when you're monitoring your companies and you're watching their earnings calls, their earnings reports, separate the truth from the noise. What is hype? What is just FUD? And what are the truths that are really going to affect your company and should inform your investing decisions? So for me, I'm not selling Palantir. I believe in it long term. As I mentioned, I think they do have some challenges. I think they have some struggles that they're going to overcome. I think they're a fantastic team. but I'm not adding to my position because it is already the number 3 holding in my portfolio, and that is the most allocation that I'm willing to give it at this point. If you like this kind of content, I'd love for you to subscribe and join our community, and I'd like to know from you, which company in your portfolio has had the most overreaction one way or another during this earnings season? Tell us in the comments below. And until next time, have a great day.